So my observations that I sent to you this morning were that the market's a momentum market, and if you disregard fundamentals, which the market is doing in large part, or at least putting them on steroids, both on the upside and downside. So as long as a company doesn't screw up, as long as they continue to do what they say they're going to do, the momentum of the market's going to take it up because it's a valuation holiday, number one. It's also a fundamental holiday. Nobody should be surprised by this because passive investors, index funds, own more than 50% of every publicly traded equity out there. They don't look at fundamentals. So as long as money continues to go that direction, and it is, at one point it was 80 cents of every dollar. I don't think that's declined over a study that was done last year. It'll continue to move. The other, as you point out, and as I mentioned in my note, is a vaccine. So, and I've said this on the show before, both points actually, as we get closer to a vaccine becoming a reality, and the headlines are filled with that news, then you'll see the market trade up and having a final big pop once a vaccine is approved. And then there's TINA. There is no alternative. So as trite as that is to say, where are you going to go? And you've got both the new investors in the market, courtesy of Robinhood, fractional shares, and others, that find much more excitement in the markets than they do in fixed income. You've got what I think is a much more overpriced, we don't really talk about that, much more overpriced bond market than we do equity market. You can't compare the historical valuation differences in bonds trading now versus where they historically traded to equities. So forget about the talk about equities being overvalued. We know that. That's not the dialogue that controls.
Liz, I think you would find little fault with what Steve just said, particularly with respect to the idea that where else are you going to go if not into equities, given where other parts of the broad investment market stand? And you point out, among other things, that it's probably riskier not to own tech right here than to own it.
Yeah, Steve, I think you just took all of my talking points. So I really have nothing less to say, but I do look at the investors
Give it back
right
to
now.
me, Liz. I'll go.
You're forced into equities if you have any return target at all. You're not going to get that return target from bonds. You're not going to get it from a lot of alternative assets until we get inflation. And it's important to have diversification in the portfolio, but I do believe you can over-diversify and you can diversify away your opportunity. So I say this a lot to our clients, invest like you mean it. And in this particular environment, I actually like that the NASDAQ is down a little bit today and the Dow is up because it shows that cyclicals are coming back. It shows that some of that broadening out is continuing. And we've got some other sectors coming off the bench to carry the day as we continue this recovery. So I stay optimistic. I'm trying not to be Pollyanna, but I'm still optimistic.
Tiffany, why don't you jump in here and talk a little bit about the fact that growth continues by a large margin to outperform the so-called value stocks. We had a really spirited conversation about that yesterday. And the other word that is floating around in the ether these days is overbought. Tell me what overbought means to you and how concerned you are about whether sections of the market are, in fact, overbought.
Yeah, so I feel like we were having this conversation on the show a few weeks ago when value kind of took a little bit of like a run, but clearly growth is outperforming value. It's in there for the long haul. It's in there to stay. I mean, you've got the Russell growth outperforming the value. It's just a very clear story. And so, when it comes to, stocks being overbought, I maintain that we are in a stock picker's environment. And, I really kind of echo what Liz is saying. You absolutely have to own tech. And again, there are 5 to 6 companies that are driving the market. And we just have to be in these names. It's riskier not to be in these names, as she pointed out. So it's really not a question of, for me, it's not a question of whether it's overbought. It's really, are you as an investor making the right decision? Are you making the right picks? And for me, I love anything tech. I love anything tech adjacent. And I love tech enablers.
Tech enablers, what does that mean?
Enablers. Yeah. So any platform, and I'm going to talk about a few in a minute. Any platform that is enabling existing businesses to convert to virtual or digital business sales.